Did you know that a hidden financial crisis might be lurking in the shadows of our banking system? Welcome to Financial Insights in Minutes, the channel where we summarize the top real estate market videos from the day. Today, we're diving deep into the 2024 housing market predictions and the risks we may face.
With experts sharing predictions about shadow banking and its potential to trigger economic collapse, you won't want to miss this.
From corruption in our economy to housing policy impacts, we've got it all covered for you.
So stay tuned as we break down some of the most pressing insights and trends in today's real estate news.
Here's a quick look at what you can expect in today's episode. First up, Real Estate Mindset examines looming dangers in shadow banking with Mitch Wechsler's alarming insights. Next, Saks Realty features Dr. Mark Faber, exploring how corruption could lead to a crisis in the U.S. economy. Then, Christina Smallhorn discusses the competing housing policies of Trump and Harris amid an affordability crisis. Following that, Jason Walter from Redfin reveals concerns over improving affordability, not translating to home sales. Finally, we'll dive back into Real Estate Mindset for Jeremy Baggett's revealing discussion on appraisal practices. Welcome back to Real Estate Mindset. Today we're diving into the imminent banking crisis with our special guest, the insightful Mitch Wechsler. We're unraveling the secrets of the shadow banking system.
That's right. Mitch breaks down the intricacies of shadow banking and its implications on our economy. Spoiler alert, it's pretty alarming.
So, what's the core thesis we should take from this discussion?
The chilling reality is that the shadow banking system operates without the same regulations as traditional banks, creating significant risks that could lead to financial turmoil.
Let's look into the commercial real estate crisis. What numbers stand out?
A staggering $24.3 billion in delinquent commercial loans, plus over $38 billion in U.S. office buildings are at risk of defaults. The warning signs are clear.
And what about the smaller banks? How are they holding up?
Their exposure to commercial loans is at 21.6%, which means potential severe write-downs could hit them hard. The odds aren't in their favor.
Let's clarify. What exactly are shadow banks?
They're financial intermediaries that create credit and conduct loans without the same regulations as typical banks, effectively flying under the radar.
What predictions are emerging in this discussion?
The consensus is that shadow banking could eventually lead to a financial collapse, especially if a significant player fails, causing panic across the system.
To wrap it up, what can viewers take away from this?
Being informed and aware of the shadow banking system is crucial. If these issues resonate, don't hesitate to share your thoughts in the comments.
What's the next step for viewers who want to take action?
Join the fight, sign the petition, and let your voice be heard. Together, we can tackle these challenges head-on.
Welcome to Saks Realty. Today's discussion dives into a hotly debated topic, the corruption that many claim has destroyed the U.S. economy. Joining us today is the insightful Dr. Mark Faber, a PhD economist known for his critical views on financial systems.
Absolutely. Dr. Faber brings a wealth of knowledge from his time as an economist and author, shedding much-needed light on the pitfalls of the current system. Fasten your seatbelts.
So what's the core thesis of Dr. Faber's talk? What should we really take away?
Dr. Faber argues that corruption and ignorance among those in power are pushing America towards socialism, severely impacting the average citizen's quality of life and financial freedom.
Let's break down the key points from Dr. Faber. First up, what about the government's role in this?
Dr. Faber emphasizes that increased government intervention leads to a reduction in personal freedoms, as many policymakers simply lack the real-life business experience necessary to make informed choices.
That's pretty alarming. What about the economic consequences he discussed?
Indeed. More than 70% of Americans are now living paycheck to paycheck, and many young adults struggle to find homes, making affordability worse than ever.
And what did he say about corruption and policy?
Dr. Faber points out that many policymakers seem disconnected from the everyday struggles of citizens, often implementing policies that favor financial industries, perpetuating cycles of inflation.
He also touched on global conflicts, right?
Yes, Dr. Faber warned that tensions between global superpowers could lead to conflicts that reshape economies worldwide, creating historic repercussions.
Moving on to predictions, what does Dr. Faber foresee for the economy?
He predicts ongoing inflation will further erode Americans' living standards, deepening the wealth disparity and leaving middle America in the dust.
What about the political landscape?
Dr. Faber warns that increased government reliance may push the U.S. towards socialism, where economic policies prioritize social welfare over market freedom.
To wrap things up, what are the main takeaways?
Dr. Faber stresses the importance of being informed and proactive about economic choices, urging citizens to understand the political landscape to protect their financial freedom.
What should viewers take to heart from this discussion?
The call to action is to reflect on personal freedoms and push back against government encroachment that could lead society down the path of socialism.
And for our viewers, how can they contribute to policy discussions?
Great question. Viewers should engage in conversations about economic policies and share their thoughts below, as every voice matters in shaping our future.
Welcome to Christina Smallhorn's YouTube channel. Today's topic is the battle of housing policies from two significant political figures, Trump and Harris. A comprehensive discussion ahead.
Absolutely. It's vital to critically analyze the housing policies, especially with the current affordable housing crisis. Joining Christina are real estate experts Ray Ellen, Palm Beach Paul, and Jackie Baker. Buckle up for some insights.
So, what's the core thesis surrounding the housing policies of these candidates?
The central theme is to evaluate how each candidate's policy addresses the ongoing affordable housing crisis and to assess their effectiveness in providing solutions.
Let's dive into Trump's housing policies first. What are the key highlights?
The focus is on reducing mortgage rates, cutting red tape, and promoting tax incentives for new buyers. But the real impact depends on underlying economic conditions.
Now, what about Harris's policy? What are the standout features?
Harris's plan aims for the construction of 3 million new homes, offers significant down payment assistance, and proposes an innovation fund to support local solutions, but implementation is the key.
What challenges do both policies face in practical terms?
They risk inflating prices due to increased demand and may struggle to meet the supply needs in the limited time. Regulatory hurdles also complicate land acquisition.
Crystal ball time. What predictions can we make about the housing market?
One prediction is that if these policies lead to more buyers, costs could rise further, especially while supply struggles to catch up.
Any thoughts on future adjustments in the housing market post-elections?
Absolutely. Depending on who takes the lead, we might see significant shifts in regulations or incentives aimed at homebuyers.
Wrapping it all up, what are the final takeaways?
The key takeaway is that while both plans address the affordable housing crisis, real success lies in effective implementation and overcoming regulatory barriers.
What do you think about both candidates' housing policies? Do you have a preference?
Great call to action. Viewers, share your thoughts in the comments. Let's hear what you think.
Welcome back to the channel. Today's topic, Redfin's latest update reveals a fascinating trend in housing affordability versus home sales. Spoiler, there's a twist.
Indeed. Surprisingly, even with improving affordability, real estate transactions still seem to be stalled. Jason Walter leads us through the nuances of today's market.
So, what's the big picture emerging from Jason's findings?
The crux here is while we see a drop in monthly housing payments, which is encouraging, overall pending home sales are down year over year.
First up, what's this good news about housing payments?
Yes, the average monthly housing payment is now nearly $250 lower than its peak earlier this spring. Great for buyers.
And what about inventory? Is that climbing as well?
Correct. We're seeing a significant rise in available homes, 20% more compared to last year. Choices are up, yet buyers aren't rushing.
Now let's talk about the elephant in the room, home sales.
Right. Despite the rising inventory, pending sales are down 5% year over year. But hey, that's an improvement from last week's 6.2% decline.
Looking ahead, what predictions are circulating?
Many believe that the combination of high home prices and economic uncertainty could extend the current market slowdown.
And how about sales volume?
We might see low sales volumes for a while, especially with many buyers sitting on the sidelines and waiting for the rates to drop further.
What's the final takeaway from today's data?
As buyers enjoy lower payments, they remain cautious due to high prices and economic worries. This creates a complex and intriguing situation for the housing market.
So the numbers show that affordability doesn't necessarily translate to sales.
Exactly. Let's get some viewer opinions. Why are you waiting to buy? Comment below on your reasons.
Final question, are we close to a market rebound?
That's the million-dollar question. Share your thoughts in the comments about whether we might see a turnaround soon.
Welcome back to Real Estate Mindset. Today's video is absolutely bonkers. We're diving into the shocking reality of how appraisers are reportedly being forced to inflate home values.
That's right. Today's special guest, Jeremy Baggett, an expert on appraisal practices, is here to shed light on how intimidation is changing the landscape of home appraisals. Buckle up.
So, what's the core issue Jeremy is discussing? What's the big takeaway?
The main thesis is that the system now pressures appraisers to compromise their value assessments. This culture of intimidation distorts the true value of homes, risking another financial crisis.
Let's break down the key points discussed, starting with appraiser intimidation. What's happening here?
Appraisers are terrified of being labeled biased if they report low values, creating a situation where they feel forced to inflate home values to avoid complaints.
Interesting. Now, what role does H.U.D play?
H.U.D's funding has led them to hunt discrimination aggressively, though this has inadvertently pressured appraisers to comply with inflated values.
And what about automated valuation models?
These models, which often neglect subjective views and unique property features, have proven unreliable, leading us to the brink of another crisis.
What's driving the home values sky high?
Bidding wars are a product of fear of missing out. These inflated sale prices often become standards for future valuations.
How are taxpayers affected?
If appraisals continue to inflate unjustly, homeowners will see increased taxes, and we might witness another costly bailout from taxpayers.
So, what predictions are being made?
One major prediction is that taxpayers will bear the financial burden as inflated property taxes from compromised appraisals continue to rise.
What about the state of the market?
There are fears of another real estate crisis looming, with history repeating itself due to similar pitfalls in appraisal practices.
To wrap things up, what are the core messages?
Protecting appraisers is crucial for accurate property valuations and preventing future financial crises. A transparent system is paramount.
What reforms are necessary?
The government must ensure proper enforcement of appraisal standards to root out misconduct and protect taxpayers.
How do you think these issues will evolve?
Drop your thoughts in the comments. Do you think appraisal values will stabilize or continue to inflate?
In conclusion, our discussions highlighted how shadow banking could bring about severe financial instability, as emphasized by our first guest, Mitch Vexler, who warned of impending risk factors in the system.
Additionally, Dr. Faber's exploration of corruption brought forth critical perspectives on how it impacts the economy's fabric and threatens individual freedoms.
Thus, while Christina Smallhorn examined the housing policy differences between Trump and Harris, experts like Jason Walter and Jeremy Baggett emphasized intuition-driven market behaviors around sales amid inflationary pressures.
So, what does this mean for you as a buyer or investor? Understanding where these policies land could dictate your next moves.
Thanks for watching Financial Insights in Minutes for August 19th, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.